Thanks for clicking! The Bank of Canada plans to end quantitative tightening, or start buying assets again, in 2025. This according to a highly anticipated speech coming from Bank of Canada Deputy Governor Toni Gravelle. While some, including RBC, had thought that the bank would be ending quantitative tightening within a few months, as a result of the stresses showing up in the overnight repo market that we've discussed so many times on this channel, Gravelle noted in his speech that A, that's not the case, and B, that could very well be the case.
Maybe, baby.
The speech from Gravelle was highly anticipated, as it was the first time that the Bank of Canada, aside from its post on Twitter and a question here or there from the Finance Committee trying to figure out what it is, it's the first time that the bank has proactively addressed the stress in the overnight repo market that we saw in January. And Gravelle didn't just go over the stresses in the repo market. He also went over the resumption of the auctions of the Receiver General, the government loaning money to the banks, and the government's program to purchase mortgage bonds. The government buying debt from the banks.
I'm what counts out here.
So, what I want to do today is go over the Bank of Canada's plan to end quantitative tightening in 2025, take a look at the bank's assessment of the stresses in the overnight repo market, and then go over Gravelle's discussion of the government's plan to loan the banks money and buy up mortgage bonds. As I mentioned back in January when we first covered the stresses occurring in the overnight repo market, this is an ongoing story, and we'll obviously continue to track this story on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into QT. Very briefly, as we've gone over this at great length on this channel, what is quantitative tightening? Quantitative tightening is basically the opposite of quantitative easing, or QE. Under quantitative easing during the pandemic, the Bank of Canada bought up hundreds of billions of dollars worth of government bonds from the banks in order to inject cash into the system. The banks had lent the government money in exchange for bonds. The Bank of Canada printed up a bunch of money, gave it to the banks in exchange for those bonds, and the banks lent that money out into the economy at low interest rates. And realtors thought they were Alec Baldwin.
I drove an $80,000 BMW.
In quantitative tightening, QT is the opposite of that, where the Bank of Canada tries to get that money out of the system. So, the government out of Canada will take money out of the system, either vis-a-vis tax revenue or borrowing it from the banks, and they will pay back those bonds that are currently held by the Bank of Canada. And when that money is paid to the Bank of Canada, that money will basically cease to exist. That money that was printed up and injected into the system during the pandemic has now been pulled out and no longer exists, decreasing the money supply, decreasing the amount of money available in the economy, which is supposed to slow down inflation.
Really?
This is one of the tools the Bank of Canada uses to slow down inflation, getting all that printed money out of the system. And it's been doing a good job of it thus far, with all of that money that the bank printed during the pandemic hitting a high of $400 billion, now being drained down to around that $100 billion mark. And the Gravelle said in the speech that the Bank of Canada expects when that amount hits $20 to $60 billion, that's when the Bank of Canada will be ending quantitative tightening.
And settlement balances continue to fall. We expect settlement balances to land in a range of between $20 to $60 billion. Based on the maturity profile of our assets, we should get to this range sometime in 2025.
So, when all of that money that the banks have in their accounts at the Bank of Canada reaches $20 to $60 billion, the Bank of Canada thinks it will have tightened enough and will start resuming the purchases of bonds. It will start replacing old bonds that have been paid back. And as to why the central bank thinks that $20 to $60 billion is the magic amount of money to leave in the banking system, Gravelle's explanation was telling.
As I mentioned a little bit in the speech, is that we want to provide enough settlement balances so our floor system runs well. We have good control over the policy rate. There's very little volatility in terms of overnight market rates relative to our target policy rate. But we don't want to have so much settlement balances that financial institutions lose liquidity management discipline.
Liquidity management discipline. That's a nice way of saying if you give the banks too much money, they won't be responsible with it.
You're weak, you're out of control, and you become an embarrassment to yourself and everybody else.
Oh, listen to you.
Now, Gravelle did note that process of pulling money out of the economy or quantitative tightening could in fact end prior to 2025 if one or more of four conditions are met. A concern over the lack of liquidity, the banks needing money from the standing liquidity facility, funding pressures that go beyond the overnight repo facility, or persistent pressure on the overnight repo rate. And while we don't need to go through all of these, the common theme here is that if the Bank of Canada sees a lack of liquidity in the system, sees signs of a lack of cash in the system, be it from the banks using the standing liquidity facility where the banks can borrow money from the Bank of Canada, or if the bank has to provide widespread repo loans like we saw in January, then the bank could abruptly end its quantitative tightening program.
Do you want to form an alliance?
And that brings us to Gravelle's discussion of the overnight repo loans, cash injections that the Bank of Canada had to do in January.
We've seen a lot of speculation about whether QT may need to end before we get to those levels of settlement balances. All over the media, and half the room are probably aware of that speculation. What's driving that speculation is the upward pressure we saw in overnight repo markets over an extended period starting in late 2023 and continuing into the early part of this year.
Yeah, if you'll remember, when there isn't enough money in the system for whatever reason, and overnight rates, the interest rates that banks charge to loan one another money overnight, spikes, the Bank of Canada can, and did, step in to provide overnight loans to keep the interest rate, to keep the overnight rate where the Bank of Canada wants it. However, Gravelle notes that the stress we saw in January, where the Bank of Canada stepped in with multiple $5 billion overnight loans, wasn't due to a lack of liquidity.
We don't think the decline in settlement balances linked to our normalization process has been much of a factor behind the tightness in overnight markets.
Notice how he said much of a factor. This is going to be important later. Instead, Gravelle echoed that of Deputy Governor Carolyn Rogers at the previous press conference, when she noted that stresses in the overnight repo market were due in large part to the banks thinking interest rates were coming down shortly.
The surge in demand for repo funding in Canada came from a growing expectation that interest rates are going to fall. Late in 2023, market participants around the world became increasingly convinced that major central banks would pivot to an aggressive policy rate cut path. Because of this conviction, many participants in Canada and elsewhere took leveraged long positions in government bonds to take advantage of the expected shift in policy. The more the policy rates fall, the more those bonds will be worth.
So, the banks, etc., thinking that interest rates were coming down, borrowed money short to buy long-dated bonds, to cash in on those higher rates of longer-dated bonds.
I'm so glad I could help.
But, as we've discussed before on this channel, it's not clear the extent to which this explanation matches reality, as markets have anticipated imminent rate cuts in the past, and the Bank of Canada did not have to step in to provide overnight loans. What was different this time around?
I don't know.
And, on this, Gravelle, later on in the appearance, provided a caveat on the explanation that liquidity wasn't much of a factor.
You said that the core stress wasn't related to settlement balances.
It's not the main factor.
Not the main factor, thank you. There is a large maturity of government.
Who's on the other side of that room? Who's he looking at?
You keep your mouth shut.
Regardless, the Bank of Canada says that it could end quantitative tightening if there was a major liquidity problem in the system, which it insists that there isn't, but also says that there kind of is.
One of our principles is transparency.
Clearly.
With that said, as we saw all through February, we haven't had any more overnight repo operations, as some of the pressure has been relieved, with the government stepping into the bank lending market.
So what we saw also is that the excess cash that the government holds with us, we reintroduce those operations, those auctions that we were doing for decades before the pandemic. We reintroduced those. That allows the government to gain a bit of a competitive rate in the overnight market as well. So between those two tools, we think we have the capacity to cap and contain ebbs or in demand or increases in demand and overnight funding, especially in the repo markets.
And yeah, we've talked about this before on this channel, where the Government of Canada takes its excess cash on deposit at the Bank of Canada and loans it out to the banks vis-a-vis an auction. So, rest assured, if you didn't like the Bank of Canada printing money to enforce its target rate to loan to the banks, the government will now be using tax dollars to augment that function.
I'm so glad I...
But it's not just the banks to which the government will be loaning money. They're also going to be buying up mortgage bonds.
Mentioned as well that there would be no further purchases of Canada mortgage bonds, and is that just related to the government?
Yeah, there's another big buyer out there.
Right, the government of Canada.
And yeah, we've talked about these purchases on this channel as well. We talked about it back in January when the Canadian government announced it would be buying up mortgage bonds, buying up collections of mortgages, and the government started those purchases just last month, now holding about $7 billion worth of mortgage bonds, yielding between 3.75 and 4%.
How the f you do that?
Yeah, given that a decent 5-year fixed is currently sitting at 5.14, we're not exactly getting the best return on our money. So, in summary, while the headlines are going to tell us that the bank isn't ending quantitative tightening until 2025, there's lots in this appearance by Deputy Governor Toni Gravelle to suggest otherwise. The Bank of Canada says the overnight repo operations weren't due to a lack of liquidity, but then admit that they weren't due very much to a lack of liquidity. So a lack of liquidity in the system, the liquidity that the Bank of Canada is currently draining vis-a-vis QT, was a factor in the bank's overnight repo operations. And Gravelle took time out of his speech to stress the factors which the bank would consider if it decided to end quantitative tightening early. If the Bank of Canada has to end quantitative tightening sooner than it anticipated, if it has to start buying up government bonds yet again, especially when the government is running a deficit, then that is in fact inflationary. Given that inflation still isn't sustainably at 2% and we're still seeing pressures coming out of the United States day after day, the Bank of Canada, the money printer, buying up bonds again, buying up bonds to fund a deficit, may not be exactly what the doctor ordered. With that said, we will continue to track the Bank of Canada and how it deals with any real or perceived liquidity issues in the system on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.